But I pushed my 10 o'clock back a bit.
All right. Well, hey, good morning, everybody. Welcome back to the Making Moves in Multifamily Facebook Live with Tim and Tim every Tuesday at 10. So thanks again for everybody for joining in. We got a really interesting guest today. His name's Sam Silverman. If you read the bio a little bit about him, he runs Silverman Capital, which is a private equity fund which specializes in multifamily or commercial real estate. I think that what Sam has done in such a short period of time is absolutely remarkable, and you guys are going to get in a ton of value. I know that I've already gotten a ton of value by talking to Sam and learning about how he structures deals and how he got started, how he prospects clients on LinkedIn, and just overall how he's attacked his markets in order to establish himself as one of the premier capital raisers for a select group of people. So without further ado, Sam Silverman, why don't you introduce yourself and say hello to everybody and give us a little background, a little better introduction, and tell us who you are and what you do.
Cool. Thanks, Tim. So my background's really in tech sales. And the reason I think that's important is it kind of feeds into the capital raising piece of it, right? So I think when you look at capital raising, it's effectively sales. And the better you understand your end buyer and investor, the better off you'll be with aligning to their interests, right? So for me personally, it was always, I'm my exact profile of buyer, right? Of investor, right? Someone with a, meaningful W-2 that's very time consuming, stressful, right? So you look at the profile investor, it fits really well there. It's kind of the last, 9 months, give or take, I've quickly realized there's a need, right? Like to me, if you look at multifamily, really there's two main components of it, right? You find a deal, you find money, right? Everything else can be supplemented by someone else. So understanding that side really quickly, I knew that with my job today, there is no way I can go find deals, right? Like it just wasn't something that would be an efficient use of my time or something that I can scale really quickly, right? So when I looked into it more, the capital raising piece of it made a lot more sense to me just because I'd already invested as an LP in 10 or 12 deals at this point, right? I understood the concept really quickly. I invested in single family first, had that whole nightmare, right? So kind of switched from there to investing as an LP. And then really just realized there's a niche on the capital raising side that is scalable, right? For me, I like things that you can scale without putting more time into them. So if you look at it, kind of thinking through capital raising, right? Like you have your base of investors, right? Those, if you do right by them in terms of communication, transparency, right? Execute on performance of deals, and spend the rest of your time prospecting, right? Looking at how do you bring on new investors? How do you evaluate new partners? You can grow your business and keep your base pretty consistent, right? Really easily, right? So it allows you to keep scaling up the amounts you raise, the allocations you get in deals. But then in terms of kind of partnerships, I've looked at, how do you find the right people to go work with? Because in kind of my role in this business, finding people who are transparent, are ethical, right, perform well, give clear reporting, are, make your life easy, it becomes a lot easier to go raise for those deals. And also, even if you make a few points less on the capital raise in those transactions, the risk and experience is worth so much more, and you can go make it up in volume and referrals all day long.
Absolutely. I think you touched on, so many good points right there. I mean, I know that Tim Brotz, another great Tim in the industry, he talks about always focusing on the two revenue generating activities. That's finding deals and finding money, right? And you identified that right off of the bat, saying this is not scalable. And everything that does not make me money, I can supplement with somebody else's time or expertise or business or whatever. And that's really, really important. And I love that you touched on that because, that is something that really helped me set my guidelines straight of what I was going to focus on, what else is noise. So what I wanted to ask you about is how are you attracting new money to you, right? Because yes, raising money is a little bit of a sales game, right? But I mean, if you read a book like Pitch Anything or Flip the Script or Never Split the Difference, you really don't sell anything, but you attract things to you. So with that perspective, where it's not truly sales, but it's trying to attract people to you, what are some things that you've noticed in your recent experience about raising money by, ways that you're trying to attract people to you and, that give people comfort to invest in your deals?
Yeah, so I think it's one, understanding your profile of person who you want to go raise capital from, right? So for me, I have kind of two main profiles of people, and then you have a few branches that kind of stem from that tree, right? So first, in mine at least, it's, given my background, it's kind of up and coming, either new managers, high level sales reps, right, who may have 25, 50 grand a few times a year, right? So for them, the storyline is much more so why this versus the stock market, right? Kind of like selling the dream behind it, right? Of the time balance, right? Sharing past stories. Whereas the other profile person who's going to make up the larger allocation I typically get from them is the kind of seasoned executive in tech or a founder of a company who has, a few $1,000,000 plus. And it's more so how do you convince them over time to move that money from their brokerage account to you or kind of out of other areas. Or it's kind of the founder of a company, person who's at exits, who primarily invests in VC angel funds, where for me, the way I position that is that you look at a VC or angel fund, you can go 0 or 20x with a fund, right? Like they have home run potential, but you also have massive downside.
Mm-hmm.
So the way I position these is that, if you look at a multifamily deal with the right operators, you'll be between 1.8 and 2.5x in 18 to 60 months all day long, right? Like it's very, very consistent to 2x your money in 5 years, right? I think right now we're seeing much better than that in the market just because of how cap rates have compressed. But I think it's also just understanding how you position it versus what they do. So kind of aligning to the better you know that person, the better you can position to what they're doing. So I think you always have to have a selling point against what they're doing currently, right? And also kind of tying into, I partner with 4 or 5 main operators as well in our deals, having selling points against and for each one of them as well, to position them differently. So a lot of my time is spent on Bigger Pockets forums, on LinkedIn, right? I have a profile of person that I find. You can go search in LinkedIn Sales Navigator for lists of those people, and then you reach out to them, right? Kind of start conversations with them. My background is in building prospecting teams for software companies. So kind of taking that to this field, which there's a massive gap in, like many of you have been reached out to on Facebook or LinkedIn from financial advisors or franchise consultants, right? Like the bar is set pretty low for the level of outreach. So like being somewhat personalized, not copy and pasting a message goes a long way. And then the biggest thing and the highest converting conversations you have are referrals, right? People who, right, you have a good friend who mentioned something, you'll take a more serious look at it from them versus a stranger you don't know. So the biggest thing is partnering with the right people that then allow your investor experience to be really strong. And then the referrals start coming in really consistently. And then another big piece of it too is just deal flow, right? Constantly having deals that are open to go invest into. Because right now, if you look at it, right, say for example, I'm doing my own deals where I'm, finding deals, raising capital for them, kind of running it all myself, like my group is doing that. There are very few groups who do enough volume to only really work their own deals, right? So it's very, very tough in that sense. Where if you're, doing 2-3 deals a year only, it's really tough to have an ongoing conversation with investors. We don't have a deal for them always. On my end, kind of the way by working with a few different operators, we've done about a deal and a half a month over the last 9 months. Which just gives, there's always something open in front of them that sparks the conversation. They ask questions about that, right? The consistent flow of deals also helps with credibility. And then obviously the biggest thing is once you have exits too, the capital snowballs back in that was in that exit. And also it's a lot more compelling of a story or case study to then use for future investors. So kind of if you think about it, right? People may ask, hey, just starting out, how do I go have those case studies? Partnering with people who do really helps bridge that gap experience, right? So like on my end, I started, 9 months ago on the raising capital side. The people I've worked with have done, thousands of units each, where I can then bank my experience on them, right? Really all I'm doing is picking the right horse to go invest into.
Yeah. Yeah, man. What I keep hearing is like, I break that down. And what I keep hearing is relationship. The deal is almost secondary. If I'm really, if I'm really kind of listening to you, it's like, know your investor. The deal's almost secondary. You know what to put in front of them because we were chatting just for a minute before this, and it's like, what's that investor looking for? Is it that tech executive with a good income who's not looking to leave his job? So he's not like some of us out here looking for, hey, I need that consistent 10% cash flow every month, or he's looking for that long term hey, I got a 10-year horizon, I want to 3x my money consistently over the next, 10 years. Whereas, Tim and I, we have a little bit different, investor, kind of an investor book, if you will, where we have a lot of folks that are looking more at that prep. That prep's really important to them, right? Yeah. So did you kind of go into it with understanding the types of deals you would be presenting first and then look for the investor to meet that? Or did you go the other way? It's kind of a chicken and the egg, I guess, is what I'm asking.
Yeah, it's I think now more strategic about it. Like at first it was more so just get into a deal, right?
Mhm.
On my end, and then kind of working out to be a deal like this. But these are all things I invested in personally. So all the relationships I built are people I've written checks to as an LP before, right? So that also helps the storyline too of, hey, I've written you a check for 6 figures plus my own money that goes into there, right? It's going to be putting my, helping vet that first, and the experience side, the return side, all those pieces of it just help the credibility quite a bit.
Yeah.
Yeah,
So they more so
your
fit
money
what I
where
was
your
looking
mouth
for.
is, right? I mean, you're putting your own money up front, and you're, bridging that gap and saying, hey, I know that I don't have the experience, but here's what I've already done to mitigate the risk for you. I've already done the work in order to vet out these experienced operators. I've put my money up first before I'm putting anybody else's money into the deal. And that credibility alone is what provides all of your investors the comfort in order to say, oh, anything Sam brings to me, I know that Sam has already done the legwork. He trusts these guys. I don't have the time to go in and vet all these contractors, these operators out and make sure that they're the real deal. Sam's already provided that service to me, so I'm going to just continue to take money and give it back to Sam to reinvest it for me.
Yeah, and a lot of it too, it's like these are just deals that I personally wanted to invest into, and I'm a pretty smart profile type to bulk my investors. And it's kind of branched out as well, right? Like the referrals come in from the various industries now, like I have pharmacists, doctors, lawyers, surgeons, or different people in different fields who are connected to these people in tech originally, right? So it's kind of stemmed out from there. But it really just kind of fell into place from that. This is what I want to invest into personally, and most people in there fit a similar profile, right? If you have a great W-2 job, for example, and you don't hate it, right? At least for the time being, like you can tolerate it for that time being, you're likely less concerned with cash flow than you are with overall yield. And the way I've always positioned to them too is like, hey, if you have a 10-year horizon, your goal in the 10 years is flip it to as much principal balance as possible. That way we want to change it to going into investing into a 10, 11% yield, right? With no upside. That's, you have a lot bigger of a balance. You're having higher cash flow to go live off of when that does happen. But if you don't need the cash flow, allowing yourself to defer that, right, can typically get you a lot higher upside in deals as well. Like personally, I hate doing deals above a 5 cap. Like I don't want to do any deals above a 5 cap, which is likely contrary to a lot of people kind of buying their own deals, right?
Yeah.
Where I want to buy low cap deals because take, for example, a 3.5 cap deal versus 7 cap deal. Every dollar of value that you add into in terms of NOI to a 3.5 cap deal is worth, 32x in terms of the valuation of it. Whereas 7, it's, worth much, much lower, right? So I think when you look at it from that standpoint, it's really important, or 28, sorry, like it's really important to evaluate in that sense as to what's going to give you the biggest yield overall for what you're looking for. And also partnering with a few different operators too allows you to have things that are more of a cash flow play, right? The way I view it, if you can partner with different operators in different locations, different asset classes, right? Whether that be, class A, class B, class C, different unit counts, different locations, different asset classes overall, right? Think self-storage, mobile home parks. You have a way better chance of collecting. If someone has $1 to go invest, you have a way better chance of collecting the bulk, if not all of that dollar they have to go invest. Yeah.
Hey, dude, that's a really good perspective, and it's a change in mindset. It's a difference in mindset, and that's why I tell everyone that growing your network is the most important thing, because you talk to people like me and you talk to people like Vest or Sam, and each one of us will give you a little bit different of a perspective. And personally, that's the first time I've heard Sam's perspective on buying less than 5% cap rate deals, and to me, it makes sense. I just never thought of it that way. So it goes to show that when you go to these networking events and you're talking with other people in the industry and you ask them why they are doing what they're doing, they'll tell you. And, it brings a different perspective that you might otherwise not have had. So thanks for that. I really appreciate, I think that was incredibly valuable just to broaden people's horizons on different deal structures and why buying a 2.5% cap rate still makes sense. So we did have one question at the bottom of the screen. He wants you to talk more about allocating the first $11 million. What does that look like?
So if you look at kind of partnering with a larger operator, right? Say, for example, the bulk of deals we do now are between, 30 and $90 million, right? So like I'm not raising the full capital stack for a transaction like that. Say you're doing a deal that's 60 million, you're raising $20 million in investor capital to go close in that deal. There's typically an allocation given per person, right? Kind of each person who's helping support that deal. Likely, myself and maybe another capital raiser coming in, and then also the collective GP team as well, kind of like the core team in that group. Allocating basically means I've taken $11 million of slots in deals, right, between $1 million and $2 million per deal, and I've actually raised and funded parts of those transactions that have now closed. And then in terms of like percent return when looking at capital raised per the SEC, it's between 7 and 11%. On a typical hold period. And that's between both an upfront fee, or acquisition fee, typically rolling it into it if you're not like a registered reps broker dealer or under a broker dealer. And then, equity in the long term as well, right, as a part of the general partnership percentage. Something on my end I focused on more so is I've been offered a lot more in terms of percentage splits for certain operators that I've passed on. Right. Typically, if someone's offering you an amount that seems too good to be true, it's likely because they can't raise the capital themselves or they're in a bad situation. And, something I've really stayed away from is people who are mid-deal raising capital that they can't fund because there's a lot of red flags there. So like I will never, if someone's mid-deal looking to help source capital for a period to help close that deal, it's something I will never do.
I just preached that yesterday to our mentorship group. I said, raising money is definitely a way to get into your first deal. And I told them all, one of my mentors had said, never raise money for somebody else's deal that you're not involved in from day one, right? Because you want to be involved in the due diligence. You want to know what this property actually is. And there's a lot of red flags that go up if they say, hey, we're closing in 2 weeks. We need you to raise 10 million. Nope. Sorry. Good.
Yeah, because that just means like something's broken in their systems of some kind, or they don't think far enough ahead, right, in terms of allocations, or the people that they bring on, they have a history of not performing, right, and that leads you to believe that in other areas of the deal they may not perform either, right? So it gives you just a lot of pause. I definitely passed on good deals with good people because of it, just because it's also a lot harder of a sale to investors, right? Like they don't want to see, hey, you have a week to go fund a deal, unless there's some significant prep for them doing so, right? Mm-hmm. So I think there's always areas where it could work, but that's just kind of a big rule I've always had on my end, is to kind of stay away from transactions like that, because likely means something in the system or process is broken, or the people aren't competent in certain areas.
Yeah, no, absolutely.
And like desperation leads to very emotional decisions, and real estate investing is not emotional. I think sales is emotional, right? People buy on emotion and rationalize with data. But if you look at real estate investing, like it is not emotional. And people who are desperate become emotional, and that's when things get ugly really quickly.
Yeah, those are really good points. So you're talking about mid deal as well. Do you tend to work with operators? How long have you known an operator before you'll agree to raise for them?
Typically at least 3 to 6 months. Right. 1, I'll write them a check. 2, I'll do references. 3, I'll do a background check at times as well, depending. And then I'll back channel them heavily from people, right? So I'll have them send over, deal performance, track record, all their investor reporting, and then talk to at least 3 of their active investors in addition to writing a check personally myself.
Yeah.
It's more of a...
No, go ahead.
Yeah, I was saying it's kind of like a longer onboarding process than others may have. Like I see all the time people just kind of jumping into deals together, which can be good, right? Like those can always work out. But for me, kind of what I've realized, I'd better not do a deal than do a deal that has more risk. Because if you think about it, like my business is purely like reputational, right? Yeah. Where if it's a good reputation, you have dollars flowing in from people. Like now I can go do, $2 million raise, not make a single phone call, right? Where if you have a deal go south, that can tighten up really quickly. So for me, like it's all calculated risks, right? And like kind of picking your spots. So taking on an operator that I see has more risk is not worth it when thinking of the long term in the business, just because, yeah, you may make yourself a few $100,000 for that transaction, but I mean, actually you won't. If the deal goes south, you wanted to make in that because a lot of it's tied to equity in the deal. Right. But then more so, the reputational hit is worth millions and millions of dollars longer term.
Yeah, it was actually kind of a loaded question. Folks, I didn't know what Sam's criteria was, but I kind of had a hunch based off what he's saying here. And the reason I asked is because, like Tim mentioned, I had a student recently as well reach out and ask, "Hey, I met these guys at a conference. They asked me to raise for their deal." And it was early on. Right? Like it was in the underwriting process, stuff like that. And he was like, "What do you think?" And I was like, "Well, how long have you known him?" He was like, "Well, I met him at the conference." And that was kind of a red flag to me. And I said pretty much the same thing you did, which is,
yeah,
hey, your investors are your lifeline. They're trusting you. You've got to bring them some level of security. So, I can't tell you what to do, but reputationally, I wouldn't do it because I'm that link to that from my investor to that operator. And I'd hate to risk that on, just a single deal,
Yeah, and it's also so it's different too. Like if they're a name brand and they've done 5 or 6 exits so far, it's a lot easier to feel comfortable doing something like that. But if it's Joe and Pete who they're doing their first deal together, like one, run away, but also just kind of understand too, like the first deals are fine if it's your own capital. I mean, I'm a lot more risky with my own capital than investor capital. Like I've invested with people I met for 20 minutes, but it's my own money. Right. If I lose 50, 100 grand, yeah, it sucks, but it's just 50 or 100 grand. If I lose 50, 100 grand someone else's money, it's not just 50 or 100 grand. It's millions of dollars of future dollars that them and their referrals could have sent me. And you never know who's going to send you those referrals either. Like people, you can always profile someone pretty well, right? And kind of make educated assumptions based on what you know about them. But you have people all the time too, who relationships I've made, I had no clue how valuable they'd be over a period of time. Like I have people who've referred multiple 7 figures into our business consistently, right? With people they know, them upping their check size, their family, their friends, and I would have never guessed it up front. Yeah. So I think it's really important too to not undervalue people, right? I think it's good to have assumptions, right, and kind of have some level of hunch on someone, but not undervaluing a relationship because it could turn out to be a lot more than you planned on it.
Yeah. And sorry, Tim, you hit on one thing that I always tell people as well, which is like, I've never lost investors' money. And that's for exactly the reason you said. I will speculate with my own. And quite frankly, guys, I've lost plenty of my own. But I've never lost investors' money. I will not speculate with an investor dollar. I just don't do it.
Honestly, I think that's obviously the best rule of thumb that anybody that's raising money from other people can go by. So if you don't already have that moral stick somewhere, your bone in your body, you better find it or change your profession for sure. So we got one question real quick. Sam, if you want to field this one.
When making an offer to raise capital funds, can I use my own business account or do I have to need a separate account for those funds? So depending what model you're doing, right? So if it's a co-GP or kind of co-sponsorship model where you're a part of the general partnership team, the money legally has to go into the business's holding account, right? So for example, say myself, Tim, and Tim are buying 123 Main Street, right? We'd likely have 123 Main Street LLC in that state, for example, and that then holding account would have to be for that business specifically. To be compliant with the SEC, the capital has to go directly in there. Whereas when you look at going in like a fund-to-fund model, you can have your own holding account that you raise the capital into for the transaction and then wire a lump sum to an operator, different fund you're partnering with. But for compliance reasons, if you're a co-GP in a deal, which I assume you would be, right, that the money that has to go directly into the account for the transaction.
Right. All right. So I want to take a couple steps back here, right? Because, you just started in May, and a lot of people out here listening to this show are going to say, all right, well, Sam, that sounds awesome. I would love to make a phone call and raise $2 million. Okay. Can you talk to everybody and tell them What was your mindset when you first started, and what are some actionable steps for them to start building their investor pool the same way that you've done?
So my first deal was $1 million raise in about 2 weeks, starting from scratch, which I don't recommend anyone doing. Like, it was a really shitty experience, but it actually helped kind of fuel where things are today. One, it's kind of committing to an amount that it's kind of a stretch, right? You should always have goals that are somewhat of a stretch, but not enough where they can burn a relationship by not performing. So kind of on my end, right, I've always invested in deals like this. I've always had a good reputation from being in software sales around a lot of people who have, liquidity to go invest in deals like this for the right projects. And kind of investing in a lot of these deals myself, I've always had people ask, hey, if you ever do something, let us know. So it's more so kind of going back through my LinkedIn contacts, and I've made probably 450 cold calls in a period of a week, between LinkedIn messages, emails, legitimate calls, to go build that list for that specific deal. People I knew, acquaintances, kind of calling on, all the people who said they'd invest when you have something, and it's typically not those people who actually write you a check, which is surprisingly enough. So it's more so kind of just putting a lot of output at first to gain interest. And I definitely recommend you start doing this prior to having a deal, because even if someone is totally interested, having liquid capital, especially in larger amounts for a period of time, just may not be doable, right? If they're commissioned sales reps, they may not get commissioned for 3 to 6 more months, right? They may have a family event they have to use capital for. They may have money in other investments that are illiquid for a period of time too, right? The stock market, for example, is getting killed right now. So people may have capital there that they're like, they're big believers in the sunk cost fallacy, where I'm just gonna keep believing in there until it pops back up, right? So I think like a big piece of it is start doing the work before you have something you need to go allocate it for, right? So I think one, it's figure out who your profile of investor is. Is that someone in tech? Is it someone in ideally something you have some kind of background in to relate to them? And if not, start learning how you can understand how they think much more so. Second, it's actually making outreach, right? Like having conversations with them, kind of explaining what you're doing, explaining the kind of projects you're looking for, explaining your criteria and how you're evaluating deals as well. I think is really important, because basically what someone's doing when they're giving you capital is basically being confident in your decision to allocate into a certain way. But yeah, the biggest thing is like consistent outreach. And then it becomes more of a push to a pull, right? Where people start coming inbound, people start referring other people. But that's something I'll never stop doing, is just prospecting outbound, because that's how you can control your fate a lot more than relying on referrals or people raising their hand. And it also helps you sell a lot better too. Like going back to that operator who is 2 weeks away from closing a deal and need $10 million, right? You can hear desperation in someone's voice all day long. Mm-hmm. So by putting yourself in a position where, for lack of better terms, like, I don't really fucking care if you invest or not, like at all. Right. We'll talk about it. That's where you become much more desirable in a big sense, right? Like it's like dating, it's like anything in life, right? The less you really push for something in terms of your desire to move forward, even if you still have the desire to move forward, but like if you don't need it, it becomes a lot more desirable to go work with you. Like if I'm giving someone $100,000 my own money and they're desperate for it, it's a big red flag. Even if it's more so because their business isn't mature enough yet, it may not be tied to that deal in any way, right? Especially for people who are working on other people's deals, right? Where the performance of that deal has something to do with how desperate this person is to fill their allocation, but it's still perceived that way, right? So I think getting yourself ahead of it enough where you're not coming off as desperate will help your conversations much, much more. But yeah, like demand fuels more demand going forward always. So like getting started and just always doing outbound prospecting of some kind, having conversations and telling people what you're doing and focusing on makes your life a lot easier going forward. And it turns it from, pushing constantly to both pushing and pulling.
Man, that was, when are you going to write a book?
I have no desire to do coaching. I have no desire to write a book. I think
Sam Silverman's coaching class on how to raise money 101 coming up.
No, I'm not that guy.
Guys, if you go back and rewatch that clip, right? I mean, I'm definitely going to have my media guy cut that out and make some clips about that for social media, because what you just said right there is probably the most powerful thing in real estate, right? If you figure out how to raise other people's money, you can buy anything you want in the world. as long as you're providing a return for your investors. And you need to do the work, plant the seed so you can harvest your crops later by outbound marketing, building your avatar, building relationships. There's so much that Sam just unpacked right there. Matt, thank you so much for that. I think that was incredibly valuable for everybody listening.
Well, and I think you hit on something, and we always sum it up with it's dig the well before you need the water, basically. And I think you hit on something there, because a lot of times when folks start out, it's all about the deal. Let me go find the deal. Let me go find the deal, and then I'll figure it out. That's like really not the best way to go about it, right? Like, because we can go get something under contract anytime, but then closing on that deal, executing on that deal, doing it efficiently, quickly, without what you basically alluded to, without that desperation in your voice. That's the key, right? And you're nailing it. So, and
yeah,
by the way,
no, go ahead. Sorry.
Nope, go for it.
Well, saying part of it too is I think it really helps when you have conversations with investors too. It's like, hey, we're closing this deal this date, whether you're investing or not.
Right.
And whether it's you or someone else, I think too, part of it, like something you'll notice as you kind of go through, say you're opening up a deal and you've got, $1 million slot, for example, and you've got 1.3, 1.4 in commits, kind of putting pressure on those people who are taking long to sign documents, taking long to fund. Like, hey, not to be rude, but you need to let us know if you're in or you're out. Frankly, it doesn't make a difference to us. We just have other people who want your slot. So you have to kind of move forward or move out. And it just helps people be transparent. Like it's you feel a lot more confident having that question, right? Are you signing these documents or not type thing? When you have backups, right? So if you don't have those, you're likely not going to go ask that question, which can delay your closing, which can put your hard money at risk in a deal. But you're typically a lot more comfortable asking certain like harder level questions to truly qualify someone in or qualify someone out. And you do that from a position of power or from a position of desperation.
Yeah. Yeah. And some people sometimes seem to confuse it, Sam, because I don't, I had somebody one time that was like, man, you just sound like you're indifferent. I'm like, I'm not indifferent. I'm not indifferent. There's a line there, right? I'm not indifferent. I care about the investor, right? But what you're not saying to them is, I don't care if you invest in this or not. What you're saying is, hey, here's an opportunity. Don't miss out. Right.
Exactly.
Don't miss out. And I'm bringing this to you because it's a good deal and I know what your goals are and it meets your goals. So, if you're interested, let me know.
Yeah, exactly. And that's when it really flips too, is when you don't have to, it's not a difference. It's more so difference on if you write a check now or you wait 6 months to write a check, right? Or if it's just not for you. And I think part of it too is be able to say no to someone who wants to give you their money is a really powerful feeling. Also from, if you think about it too, like if you're raising capital, that is, on paper, a 5-year relationship, right? For most deals. So making sure that you don't take on someone who you'll immediately regret in doing so. Like I've had people I've now been able to turn down because that's not worth my mental headspace of taking them on as an investor. Like when someone's breaking up lawsuits, your first call, they're bringing up just all these things that you're like, okay, there's a big ratio I always use in life. Like what's the upside or what's the return versus what's the pain in the ass, right? It's numerator is what's the return, bottom side is how difficult is this person going to be. And I think you can kind of move yourself away from those people who fall into the wrong side of the bottom half of that. When looking at transactions too. And that's when your life becomes a lot easier. I think a lot of people get into this business too for freedom and peace of mind, and certain people don't enable that. So being able to kind of move yourself away from that and building enough pipeline of investors and potential capital, be able to say no will make your life far easier. Because I think a lot of this business is kind of lifestyle by design. And a big portion of it too is who do you want to be interacting with? Who do you want to have as partners in your deal? Because some people do take more time than others, right? In terms of once they're in a deal, once they're in a project, of how often they reach out to you.
So I want to connect the dot on something here. It just kind of dawned on me for a second. Did you say May? Like you started doing this in May?
Yeah.
And I think you said earlier, if I read that right, you've raised about 11 million for deals?
Yep. So far. And this year alone should do between 30 and high end of 50.
Yeah. So guys, like Sam's dropped a ton of like incredible nuggets of wisdom here. Go back and watch this thing, and 11 million in what's that? Like 7 months,
Something
8
like
months.
That. 8
That's
months.
That's extremely impressive, folks.
Right.
Extremely impressive.
Yeah, and I mean, Sam is definitely an anomaly. Not everyone is going to have that same level of success and that growth path that Sam has had so quickly. But if you follow the steps that he told you by building your avatar and planting your seeds and outreaching to potential people, you have to put in the work in order to grow. Now, Sam has been able to capitalize on those things, and he understands people and he understands the psychology of raising money from people and providing value to others. And he implemented those things. Now, but Sam's Beachmo was the top secret to sales.
Top secret. I think you already said it, right? I think I heard something in there.
Yeah, just understanding who your end buyer and investor is, and how do you align to them? And not just understand them. It's like, hey, they, live in a 3-bedroom house in this area, right? Like understanding what do they actually think about, right? For me, if you take it, my ideal profile investor is a CRO, VP of sales in a tech company, which is the role I currently have as well on my end. So I know certain times of the month, certain times of the quarter are ideal for them, paying them at certain times as well, between kind of what they're going through, when they may have their commission pop and stuff like that as well is really important. And understanding like what kind of actual stresses they have in their life, right? So kind of looking at someone's background, you can see a lot on someone's, LinkedIn or Facebook. I don't use Facebook as much, more so LinkedIn on kind of my profile of folks. And you can see kind of how they've come up. So I think another thing too, if you kind of look at a bucket generalization too, with people is take old money and new money, for example, right? People who are old money, likely, they want the upside, right? They've never really had to struggle for their capital, at least not for a very, very long time, right? If it's kind of family money that was handed down or businesses that they've inherited. So for them, it's the upside, kind of the dream that excites them. For someone, say they're, this is obviously profiling, right? But someone who, came from nothing and kind of built their business and wealth themselves, they're likely much more risk adverse with their capital, right? Because they know what it's like to not have it, right? The person who's been there their whole life, they've never known what it's like to struggle financially. The person who you're looking at, just understanding, if they fall into one of these two buckets, you can kind of have a better idea as to your positioning around the deal to them. So I think quickly kind of picking up where someone's from, what their background is, what they care about, you can position things differently, right? Not lying or anything like that, but more so positioning things in a certain way and framing it for what would, what's most appealing to them.
Right. Yeah. You have to find the common denominator or the common ground with your investor. REIT never split the difference. What you want to get to is that's right. As soon as you get a that's right from your counterpart, then that they see eye to eye level with you. And knowing that key information about your avatar is, are they looking for the equity or they're looking for the cash flow? So then how to cater that conversation to guide them towards the decision that they should make, but you're going to let them decide it. But best what's for them because you know them as a person.
But I also
want.
No, I was just gonna say, Sam, I'm sorry because I feel like we're kind of glossing over one thing because you said it a little while ago. You threw out this number 400 and how many cold calls?
450 or so, and honestly,
the first week. That was just the first week, though.
Yeah, so that was a week, and the first partner I did kind of my first or the partner I'm probably most active with today. I called him probably 42 times to take my call, and I'd given this guy $250,000 for my own money.
Yeah, so somebody,
it's picking the right people and being very, very set on working with those people, and being very intentional in how you approach it.
Yeah,
we've done now 11 deals together, probably do 10 more deals together this year alone. Right. So that's, it kind of sucks at first, but it's also showing them how serious you are about it as well. Because on my end, if I pick the good people to work with, to me, it's a people market deal, right? Deal is a third thing on my totem pole of things I actually care about. Because in any deal, even if you have a deal that's a complete home run, something will be a mess at some point, and you want to have people there that handle things rationally when shit's hitting the fan. And they have the experience and presence to go do that and the stability, right? Also partnering with people who are financially stable. So they're not making decisions based on personal gain. It's all being a fiduciary investor capital, right? So being very intentional about who you look to partner with matters a ton, and it will shape your business as well.
Yeah. Yeah, that's great, man. I mean, incredible, like I said, incredible nuggets of wisdom here. And back to Edward's question, it's top secret, whatever the recipe or whatever is. what I keep hearing you talk about is like know your customer, know your data, but then you got to put it into action. 450 cold calls, that's tough. That is tough. That is hitting the ground, and that's
commitment.
Yeah, and that's what you get. So the recipe there is all this data and then the work. You've got to put in the work to make it happen.
That's right. Well, all right, cool. Well, this show went over in a big way, and I kind of felt that as in our lobby before we started talking. Sam, I appreciate you coming on board with us and talking into the crowd. You provided incredible amounts of wisdom for people in here that are looking to either hone their skills as capital raisers or begin their journey of capital raising. There's other people in here that might be looking to invest money as well. So why don't you tell us how people can get in contact with you if they want to learn more about, everything that you do and, where they can get in touch with you best?
Yeah, so I'm super active on LinkedIn, Sam Silverman, company Silverman Capital. So it should pop up if you search that. And then website is silvermancapital.co. So probably the two best places to reach me. Or my email is sam@silvermancapital.co.
Awesome. Yeah, and Lewis, the video will be in the Making Moves in Multifamily Facebook group. You can just go through the different content in there, and it'll be posted in there automatically. So, Sam, thanks again, buddy. I appreciate this. This has been a really, really great show. I've had a lot of fun this week. Tim, why don't you take us out?
Hey, Sam, I just got to echo what Vitaly just said there, man. Great information. I know I learned a lot. I'm getting ready to go escalate my fundraising game. I'll tell you that based on this.
Me too.
Yeah, absolutely. I'm motivated. So Sam, I appreciate it. Guys, have a great week. Talk to you guys next week and take care.
Peace.
Cool.